Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Thank you for joining us on our Friday Insights edition. It's the 28th of January of 2022. Let's get right into our Friday Insights edition and talk about what the market volatility headlines are saying and what to look for on a go-forward basis. So thanks for watching. So here we are. Who's exhausted? We're at the end of January right now. Just 4 short weeks ago, actually long weeks ago, I'll correct myself on that one, we had the Santa Claus rally and continue into the new year. And then just to get hit in the last few weeks with a brick wall, and markets are selling off. Dow, NASDAQ, S&P, down 10, 15, 20%, and even more underneath the respective indices if you look at individual equities. So the high flyers, the risk-off trade is coming out of the market. And one of the reasons, the main reason, is the Federal Reserve, which gave an update in their FOMC meeting earlier this week. Federal Reserve Chairman Jerome Powell basically said, hey, listen, we're set on a course, as we've communicated before, to increase interest rates this year. And speculation now is it 7, 8, or 9 rate hikes? And here at Blanke Schein Wealth Management, we take a more of a pragmatic approach to this. We're not going to get in the guessing game. We can tell you that it's going to be a lot less than what the market's fear worst case scenario is. It always has. So we have to really transition to what we believe what the Federal Reserve is going to do, which is transition their language later on. After they raise rates later this year, they're going to transition their language to data dependent. They have in the past, and they always will. And the reason why, if we look forward into the year-over-year numbers, yes, inflation is hot. Yes, inflation's on our kitchen table. And corporations have talked about, yeah, we're passing it along to the end consumer, our higher input costs, supply chains issues, labor increases, all of that. Pricing onto the end consumer, whether we shrinkflation, you're paying the same for less at the grocery store, or just a higher cost for goods and services that are being sold out there in the economy. That's called price elasticity, when a company can raise their price, and we're seeing that all over. In fact, every conference call that we're on and monitoring, every corporation's actually saying it's over 65% of all the sort of common theme right now of all these earnings reports that we're going through. We got huge big tech earnings this week, big tech companies sort of adding some long-term clarity and long-term sort of guidance on a go-forward basis for markets to say, wait a minute, companies are making money and they're making billions of dollars. So while price changes in the meantime, we're going through a corrective phase right now in the market because valuations were way overblown. And now market's trying to recalibrate right now as to if interest rates are up 1, 2, 3% by Fed funds rate or the 10-year treasury, higher interest rates, how that ultimately works its way into the economy. Mortgage interest rates, higher prices, housing sort of costs are going up, everything that we're talking about. So right now, we talked about this last quarter, and for all of our clients, we raised some cash. And clients were wondering why we stepped out of sort of the Santa Claus rally with some cash on the sidelines. Well, it's because we wanted to wait for the markets to come to us. The number one conversation that we've had with clients is just be patient. And here's where we are. Now we're looking at some really interesting opportunities and valuations, and we're getting excited here as we're seeing. Now, are we at the market bottom? No one really knows, but we look at the technicals and the headlines. Headlines right now, keep in mind, guys, there's 2 pages of negative headlines out there that we've reprinted us right now talking about worst case scenario fears. I'm sure this weekend you're going to see even more headlines after a week like we've had this week. But in our industry, you have to know, and experts know this, I want our clients to know this and be rest assured, the headlines follow price. So markets go down, headlines then want to sell more. Now, the correction's already happened, right? We've already positioned ourselves, we're balanced, we're taking advantage on a go-forward basis. But in the meantime, headlines follow the price, the market action. So just a little thing to keep in mind when you're reading the headlines this weekend. And also what we look at the technicals, right? There's been huge volume in the last 2 days, trading days that is. And volume is an indication of sentiment and market, just throwing the baby out with the bathwater and just exhaustion. And part of the heightened sort of sensitivity And anxiety was centered around this week on Wednesday. Again, the Federal Reserve, when they're talking about what they're going to do and how they're going to communicate what they're going to do to the marketplace. Again, that could change. There's a lot more new Federal Reserve nominees. They could be more dovish. We honestly don't know. The market doesn't know. What I do know is the market and the Fed are overreacting. The Fed can't be as hawkish as they need to be. Of course, inflation's running hot. It's going to come down over time because just the way the math works of year over year, those numbers will come over time. And the Federal Reserve might say, hey, wait a minute, we don't have to be as aggressive as we originally communicated. Remember, Fed changed course last year. They said inflation's transitory. Now they're saying we have to move 5, 6, 7, 8 times. I don't know, everyone's trying to guess. And now I believe the Fed will sort of back off, but at the same time they're saying, hey, listen, it's better to be sort of mom and dad being more aggressive and sort of overbearing as parents, but yet again, kids are still going to get to go to the dance on Saturday night. That's what the market ultimately will see. We're seeing a correction in the meantime. High volume, technically speaking, on the moving averages, the 50 and the 200-day is also, we're below those. We're setting new lows, but we're also seeing some bottoming in those markets right now. And also another positive from a technical standpoint is there's a lot of stress building in the options market, the put-call ratio. Not to get too technical, but when that's in the 95th percentile, as it is right now from a technical perspective in a reading, that means that pressure is building to an extent where we're going to see a relief rally, a rebound. As we're filming this today on Friday, markets are up. Who knows if they stay up? We want to watch the closes from this today as well as the next week to see how the market sort of gets through this. Now, that's the short-term sort of recap. Rob, that's a lot to think about. Here's what we want to look for. We already had a correction of 5, 10, 15, 20% in some of the respective categories. That's healthy. What's much overdue and long needed. We anticipated it here. We positioned appropriately. Going forward, it's not uncommon to see this relief rally continue into, let's call it March, April, May, and then see the summertime again, maybe possibly retest while we get to the back end of midterms, right? Midterm elections are going to tell us a lot. It's going to provide certainty to the market. It's going to provide possibly a stalemate in Washington, and they're going to basically stop spending all this money for all these policies. And so once that's happened, history has shown markets will rally again. So we believe we could still have a positive year, especially now that we have the correction in the front end versus the correction in the back end of this year. Again, the volumes that we've seen are really a technical level, really a positive. In fact, for the SPY, so the triple Qs and the SPYs are sort of what we just monitor. The SPY had the second highest trading volume day earlier this week. It was Monday, remember when the Dow went back and forth 1,000 points round trip. Second highest since March of 2020, the pre-COVID levels. And QQQs, the highest volume ever was this week. So that also is setting up from a technical perspective that in the short term, this becomes very interesting if we can continue putting in a bottom and working our way out of this. So that's the setup for, as we see it, this is our Friday Insights. We got a little too technical without getting technical, if you will. If you have any questions, please reach out to us. If you have friends or family or just colleagues that have concerns about the market, we're taking a lot of those calls. We got a lot of referrals from prospects this week, so our clients are happy. They're referring, and so we've been busy with that as well. So you guys have a wonderful weekend. Thank you, and take care.